What's going on, everybody? Thank you so much for checking in. In this video, we're going to go over SPY, which is the S&P 500 ETF, and we're also going to go over some stocks that we're watching for the week ahead. These stocks include names like Apple, AMD, Tesla, NVDA, and Amazon. We're going to give you all the resistance and support points that you need for these stocks, that way you know exactly what key levels to watch for the week ahead and for most of September. So let's go ahead and get started by first talking about SPY, and we're going to do so on the daily candles, where we're going to see that SPY last week broke back above a very key line trend. But before we get into that trend, we have to talk about it moving back above its 10, 20, and 50-day moving averages. These purple, blue, and yellow lines were broken below in the middle of August, and you can see that we struggled to get back above them. But just to start off the month, we happened to move right back above them, and we're right back above this key trend line, and we're going to talk about the significance of that trend line in just a little bit. Now, before we get into the technicals, we have to talk about some things that moved us last week. Last week, we saw the Personal Consumption Expenditures Report, or the PCE report, jump from 3% to 3.3%, which means that inflation actually moved up month over month. This is the first time this has happened in quite a while. So this is not good news, but the market still reacted positively. So inflation moving up away from the Federal Reserve's target 2% rate is not good news. It could mean that more interest rates are to come, so be sure to look out for something called the Fed's Beige Book this week. So the Beige Book is supposed to give us an update on the current health of the economy from local and regional leaders. This book is usually released 2 weeks before the FOMC meeting, and the FOMC meeting, remember, is where they decide monetary policy changes. That's where they tell us if they're going to raise rates or not. So far, the Federal Reserve has been consistently raising rates, and if now inflation is moving up, it could mean more rates are coming. Last week, we also saw the unemployment rate jump to a high not seen since February 2022. We are sitting at around 3.8% unemployment, which is not terrible. However, the fact that we are moving up was actually celebrated by the market, ironically, and that's because if there is a higher unemployment, it could translate to less spending, and the Federal Reserve were clear that when they started raising interest rates, it would eventually take a toll on the job market. So those higher interest rates make it more expensive for companies to hire employees or keep employees. A lot of businesses struggle to maintain growth, therefore they don't need as much employment. Therefore, you see unemployment go up during higher interest rates. So now let's jump back into the technicals and talk about that trend line we were mentioning earlier in the video. So this trend line is going to date all the way back throughout the entire year. We can see that for the last 52 weeks, this red trend line is on our charts. This is a point in which the market has gotten rejected at multiple times, and we've talked about it in previous videos. Now, just a few weeks ago, we mentioned that the trend line was once again moved back below. Every time we moved back below this trend line, we sold off for weeks. But you can see that we recovered back above it last week, and we closed above it as well. Now, zooming into the smaller time frames, we can see that SPY is forming what could be a bullish flag. Between Tuesday, Wednesday, and Thursday and Friday, you can see that we rallied and then we consolidated on the higher part of that rally, which means that all the buyers that bought it up on Tuesday are still holding the positions and are interested in potentially taking it higher. Now, the first resistance and focus is going to be the 453.70 mark. Above that point, we can begin filling this gap, and then eventually we can even move ourselves back towards the 52-week highs. We are not far away from breaking out from those 52-week highs, so bulls are definitely controlling the overall picture here. Although the last few weeks have been choppy, which is a normal August for any trader, August has always been a choppy month, and so has September. But the fact that we are still trading so close to the highs means that there is a lot more buyers interested in the market right now. So going forward, our main resistance is going to be this one at 453.70. Now, supports in focus are going to be 448.30. If we move below that level, then it could be a very sharp move back down. And that's because the move up here was very sharp. There was not much support created throughout this entire move. So if we do move back below this support, then we are likely going to fill this back down towards that 442 mark. So this is as far as SPY goes. Now let's talk about some stocks that we're watching. First, let's go ahead and start with Apple, where we can see that Apple, just like SPY, is back above all of its healthy moving averages, including the 50-day moving average. Now, if you've seen our videos from the last few weeks, we've mentioned that the 50-day moving average is what Wall Street and institutional buyers look at to gauge if a stock is more bullish than bearish. And right now, SPY, or Apple in this case, being above that 50-day moving average means that bulls are back in control. So here are some levels to watch on Apple if you're looking at the short term. First of all, you're looking for a breakout above 191.20. If it can successfully move above that level this week, then Apple's price targets are as follows: 193 at 195, but the true breakout is going to be at 198.23. Remember, this is the highest point that we reached in 2023 before Apple got rejected, and you can see that it sold off for weeks after. So if buyers can eventually take Apple to that 198.23 mark and get that breakout, it's likely going to continue on a multi-month rally, and we are expecting that to happen in the coming months. Now, the next stock on our watch list is going to be AMD. AMD has been quiet for some time now. However, buyers are taking some interest in the stock, especially after NVIDIA's earnings. AMD is not yet above its 50-day moving average. You can see that every time it tried to recover back above it, it got rejected strongly. So that is going to be the main point that buyers are watching for a move above before they start taking more confidence in the stock. AMD's levels are as follows for now. You need a breakout above 113.95 for a move towards 120.80. And above that level, we have a second price target of around 125 to 125.50. But the true breakout is going to be at 132.83. There are going to be a lot of resistance and support points that are created before it touches that point. So make sure you're checking back in so we can update you on those levels in the later videos. Now to the downside, we have a support at 104.50, but the primary support is going to be at 99.60, just below that psychological $100 support. If AMD moves below that level, it can get pretty ugly pretty fast, and it can come down to 93 very quickly. The next stock on our watch list is going to be Tesla. Now, we are bullish on Tesla despite the fact that the stock moved below its 50-day moving average last week. Tesla stock has been pulling back since their last earnings, and unfortunately, the recent price changes in their vehicles did not help. However, overall, the stock is still in a bullish trend, and we are expecting it to move higher. Let's take a look at Tesla here on a shorter term time frame. First resistance and focus is going to be at 260.90. Above that point, we see Tesla moving to the 274 price target. We do have more price targets for Tesla in the coming weeks, but this is going to be our modest price target for just a week ahead. Remember, this is a shortened week, so we don't expect any large moves. Make sure you check back in on next Sunday so we can update you on those price targets. Now, to the downside, if Tesla continues moving down, then it would need to move below 237. Below that point, it can fall towards 227 to 228. The next stock on our watch list is going to be NVIDIA. Now, NVIDIA is one of those names that has not really seen much weakness almost all year. No matter what happens, the stock continues to recover back up. Right now, the stock is trading above its 10, 20, 50, 100, and 200-day moving averages. Here are some levels to watch for on NVIDIA. NVIDIA, first of all, you notice there's no red on this chart, and that's just primarily because buyers are in full control. Even when it moves down, it's very tough to bet against this stock, because when you're betting against it, especially if you're trading options, those put options don't even move higher because of how much strength there is on the bullish side. Now, NVIDIA needs to move above 500 on the short term to see 507.60 and a second price target of 512.50. But keep in mind that when we zoom into the hourly chart and we look at post and pre-market hours, after NVIDIA reported their earnings, they reached a high of 520 before getting rejected. So ultimately speaking, the buyers will need to move NVIDIA above the 520 mark in order for it to see a new all-time high and continue its rally into the rest of the year. Now, the next stock on our watch is going to be Amazon. Let's see what's going on the daily chart. Amazon back above its 10, 20, and 50-day moving averages, looking pretty good so far, but still not above this high right here. For buyers to feel really comfortable, they need that 141.25 breakout. Above that level, it can see 143 to 144, and that would be the ultimate breakout for them. If they move above that point, they would have reached a high not seen all year, and in fact, this would be a high not seen since August of last year. So above that level, we do expect Amazon to continue towards the 150s. Now, to the downside, here are some levels to focus on for Amazon. If you are looking at the downside, you need a move below 134 for the stock to move down to 130 to 131. But even then, we don't expect it to be that bearish until Amazon breaks below 126 or so. Thank you guys so much for checking in. I hope you found this video helpful. Don't forget to subscribe and like.